Sorry, you continue. Let's say what is the hospital? It requires a long moratorium. I don't think it can start paying the loan even after 2 years. Typically, a hospital will need at least 5 years just to start early. It has to repay a loan. It can maximum pay some interest during this period. But at first, we never thought that. And year 5, at least 90 days, you think like that, but not completely there also. But in banking industry, it is not possible because most of the technologies are short term and lending, they don't have such a long term lending. So that was also one of the reasons. But the basic reason was lack of capital. Basically, there are some shortcomings in the government policies and also the leverage, over leverage, and the diversion of money. I'm not going into the diversion of money and fraud issue, but that also created a lot of problems. So delay resulted in more and more interest getting debited, and I mean, many times being capitalized, which actually should have been a revenue expenditure. So you kept on increasing the cost of closing, which actually should have resulted and shown as a loss. And we are all, I mean, doing our way we are all party to that. So my only limited point is other things we missed at that point of time. I mean, smartly was played by the promoters. The multi-level leverage. I have an EPC company. I take the contract for the project. First of all, I make money there. My own group company, which has been funded by the bank. So I make 20% profit. That I take to EPC, and then that much money I show as equity in this company. Similarly, I take a loan at holding company. A lot of banks or NBFCs are ready to give money at that point of time. So I take a loan at holding company. That money I gave to a subsidiary or SPV as equity. And the bank again gives 70 or 80% loan in that fund. So this so-called equity is also funded as a loan. So technically this project is funded 100% as a loan. This is many specific infra space. And I think you can find some of the names. I don't want to take the name. But today a lot of groups, I think, where they have lost money as bankers. They are all like that. Especially the infra groups in this country. So I think these were the basic reason and all on years.
Yeah, Bansal, you beautifully explained that the main reason was over leveraging, where it was leverage was done at various levels, and then you take the delayed implementation of the project because of so many other reasons. Projects are delayed, and obviously one thing which you highlighted is that because the moratorium should have been more. You either the project is not started, then the EMI starts. So how the borrower can pay? So I think all these things have resulted in NK crisis. But now we are, I think, more prudent, and I think things will be alright in near future. Now my question is to Bheda sir. What can be the expectation of the management? Because you are representing our CEO fraternity. So this question to you: what can be the expectation of the management from auditors to improve advanced monitoring or corporate governance?
Yeah, I think a very, very relevant and very excellent question at this point of time. The reason is that, yes, maybe all of us would be, starting our audits in maybe in a couple of months for the March 21, and in all probabilities we'll be completing the audit maybe in few days. And therefore, that what is the expectation of the management, auditors from the auditors. So now, if I can interpret this question correctly, there can be 4 type of auditors, if I can, say so. So one is the statutory auditor, internal auditors, concurrent auditors, and forensic auditors. Now, each one of them has a different role to play in their respective fields. These roles again can be based on the scopes as defined in the statutes, or maybe the specific assignment scope which is there for each audit. Now the expectation from each one of them is really very complex and dynamic subject. It keeps on changing as per the statute or as per the assignment. But then to answer your question, if I can say that there are some very common expectations from each one of them as a class to improve the corporate governance. So say each professional working on such assignments should always treat each of this assignment as unique, which requires a different methodology, a different skill set to work on the same. Like if I give an example of a statutory auditor, the branch auditor, who are being, who have to give the reports on LFAR, they have to long form audit report. And actually this year we'll have a changes maybe after lot many years. Now what happens is each LFAR has to be treated separately instead of just doing a copy paste. I think this is one of the very elementary expectation of the management from the auditor, that let us have the different facts, the actual facts for each and every auditing, not just copy paste. And for last so many years the LFAR had never changed, and therefore as in management we would not expect that you just give a copy paste. Give the answers to each and every question which are very relevant, which are not very vague, which are very specific, which are short enough to give me the details. At the same time they are long enough to have whatever I have to say, I can be saying there as an auditor, and I can, as in management, I can understand that yes, this is what you want to say. At the same time, this sort of communication should also help the management to improve the performances maybe in the coming years. That will give really lot of value addition. So if I can take another example of say forensic audit. What happens in forensic audit? Uh, Many times we have seen the reports in the forensic audit that this particular data is not available, this is not produced. This sort of things really do not help the forensic audit per se. The purpose itself is defeated. Here, as an forensic auditor, I have to use my secondary information source. I just don't have to rely on what is given to me by the bankers. I could use some other sources, as discussed in the earlier session. There could be various sources where I collate the information and give the report. So this I'm just giving few examples that how, as an auditor, whatever auditor I may be, how I can really give a very apt report. For that, I would expect that you have an appropriate digital tools, and you also have and data analytic skills for conducting the audit. The auditor should try to meet the expectations of all the stakeholders for the whatever audit assignment which they are doing. The final outcome, any engagement which the auditor undertakes by whatever any any of the auditor which we talked about, he is expected to be a topmost professional person, and therefore the quality should be provided in such a way that it adds value to all the stakeholders. Now if I talk about the outcomes, so the final outcome of the engagement undertaken by the professional has to be communicated properly, because I may do fantastic work, but if I'm not able to communicate in my reports that this is what are my observations, my findings, these are the suggestions which I am making. If required, I am giving a proper detailed answers to as a management that yes, here are the scope of improvement, here are the risks where as a banker I'm running into this risk, and what are the solutions, probable solutions for the risks which I am taking. And then also very importantly, there are various standards which are to be followed, and as a management I would expect that all the requisite standards are being followed by the auditors, because if at all, I'm aware that institute has given a lot of standards. It could be auditing standards, accounting standards. Very recently, we have forensic accounting and investigation standards, which are, first time maybe in the country. This sort of standards are coming in, and I think as a professional, I have to have this being standards being maintained, and that should be my guiding force, that yes, this is where I have to do this work in ABC XYZ, because lot of work has been done for the standards, and most of the standards are internationally followed best practices. So that will really be a great if the auditors do that, and that would be the expectations of the management as well as all the stakeholders. Then coming to the methodology for conduct of audit, I would feel that there should be an ample room for applying my all the learnings which are there for last number of years, and see to it that I get applying my all the best of my knowledge. It could be there in whatever places. There could be some unique situations in different banks, and I should apply my all the expertise to come out with again some findings, some opinion which are of and great utility. And also as a management, we would always feel that there should be a constant improvement in the quality of the reports, and also the utility of the reports should increase year by year, whereby there would be some concrete suggestions where the management can really implement the changes which are suggested. I think these are some of the very preliminary requirements or the management's expectations from the auditors. And I said, maybe there would be different auditors, as we said. So the scope of each auditor may be different. So there are statutory requirements, and there could be requirements which are, agreed upon processes and the reports which are there. This is what is the primary expectations of the management from various auditors. It could be statutory auditors, could be internal auditors, concurrent auditors, stock auditors, forensic auditors, so many auditors we are applying. There are process auditors, there are system audits. So there are so many requirements which are there. So that is what would be the expectations from the auditors of the management. That's all. Thank you.
Thank you, Atul, for your words of wisdom to all your CA fraternity. I think we all have to make use of it. As you said, that LFR, we have to be, should not be looking internet copy paste. We should put every question very carefully, and we should answer it beautifully. And the one thing which you said was, one has to understand, and that is what is expected from us by all the stakeholders. There is a frank communication. We must give our comments frankly that what is lacking and what should be done. So friends, now we are coming to the other question. So Nair sir, you are representing MSME, and as we can see today also, we are having only few people who are basically present here, and the reason is only one, that is COVID-19. So COVID-19 has given us everything. We all are scared. We don't know what will happen. What has happened was also very, I can say, it was not an easy task. It was an unprecedented situation. So during this situation, so now I question to Nair, because you are the DGM of MSME team. So my question to you is, sir, that how did COVID-19 has affected MSME sector, and how did MSME package by the Union government as well? And I am including other question also here only. And then what do you say about the future of MSME sector? So you know that MSME sector is very relevant for all of us. I can just see from my data what I have observed that 30% of the country's GDP comes from MSME sector and MSME sector. 45% of the manufacturing output is coming from here. 40% export is coming from here. And the biggest part, the most employment, 11 crore is coming from MSME sector. So your words of wisdom is very much anticipated.
So first of all, this data has to be realigned. The government of India has not come out with the data after the base has been shifted. All this data is based on Telco only. Yes, when it moved to 54 and 54, we are also waiting for the government data. It will be much more than this. Whatever data we are having right now, it will be much more than this because the basket has become very big. Now, I just quickly go through the pandemic scenario. Thanks to Government of India for coming out with a very excellent support to the MSME sector. That's what I'd like to say. To begin with, I'll put it very shortly. First and foremost thing, what the government, so first package was announced by the Reserve Bank of India, followed by the Government of India. The Reserve Bank of India, once the pandemic came in March, in the month of April itself, they told that you can have a clean look into the working and assessment of the MSME segments. We have been permitted to increase the debtor cycle period if required from 90 to 90 days. We have been permitted to reduce the margin or make it ready market. And we have been permitted to enhance the working capital cycle wherever you want. And everything, the powers, financial education was given to a lower level officer so that things can be moved fast. This is the first step. Normal days was converted to fund-based limits. We ensured that the LC revolvers has been stopped. We have most of the non-fund-based limits got involved because of this pandemic. We converted to cash credit. This was the first support which has been extended by government. Immediately after that, if you look at State Bank, together with that, we came with the COVID emergency credit line, where we gave 10% available to every customer to tide over the situation. Within 2 months, Government of India came with the GDCL loan, there is a guaranteed emergency credit line of 20% to all the fund-based limit. The government knows that we can keep funding. This is also in between. The interest during the first 6 months, the Reserve Bank of India told that you need not collect. You can the next 6 months by converting into fund interest outflow. Therefore, first they did not pay the interest. Second, working capital cyclicities. Third, all the terms were liberated. Fourth, COVID emergency loan was given State Bank some kind scheme. The GCL, the guaranteed emergency credit line of 20%. And it was further supported by GCL too. That's about 25 crores also what 20%. And every benefit there was a moratorium on it, which has to be up to 25 crores loan. GCL has to be paid at 25%, 20%. The 5 crores has to be paid over 3 years, and above 5 crores has to be paid over 4 years. This was the whole things by Government of India, etc. This is one support which came immediately. This is how they have been supporting the MSME fund. Question number 2, how is the MSME after the COVID? See, right now, the industry is after. We are moving on. There are a lot of segments which are started shining. Textile is doing well. Plastic industry is doing well. Pharma is doing well. There are a lot of segments. There are certain segments it is still yet to be well. But some segments already started. Beginning with a big way, not small way. Some of the textile people told me today, you see the profit which I never see for 5 years in the last months. Some of the polymer colors was a 25 years profit and still making. Somebody is making a killing in this situation. It's a very struggle you can take up. But others have also started for farming. Now, how to look at the MSME segment in future? I think the future of the MSME segment will continue The only challenge is that wherever there was no proper planning, I know for sure because it was in a pre-approved mode, all this roads were going to be pre-approved and non-discriminatory are two different things. But because of the government pressure, every bank has given this notice. Now the issue is from next October, you have to know how they are going to perform their payments. All loans are prepared from the next October. This is one challenge they are facing in front of us. But we hope we will be able to handle the situation. Top of it, there's a restructuring program going on during the cost of months. Without downgrading the asset quality, we can start restructure any of us. The application open, we are doing it every day, and we can give the method for 2 years moratorium, and we can be taken. People are using this benefit. Lot of consultants are going to the MSME segment, and it is going up. In future, I personally feel the scope of MSME is going to vary. Why? Because digitization has helped MSME to grow into big. Any MSME, if you look at the MSME segment, the new players in the market, the new startups, some of them see there is no entry barrier. Branch, hotel branch, supplying input, if the chef can start a supply outlet in the same quality, they are traders today. They are not traders. I did not say to the branch hotel where the branch food. If each chef of their task can come together and supply the same food, they are traders. You can challenge staff. We can challenge overall. This is the market here. The big brands which we see, the t-shirts, taking video is available for some nation to look at some good startups. And it's an online. Nobody knows who's supplying. I was talking to some of my son's friends. I asked them, where do you get the food? Where did I don't know, Swiggy is supplying is a good food. The usually things are changing. If you look at the food and beverages industry, more than 30% of the market they are not business. Unbranded business. Therefore, the future of MSME is not going to that. But it's a good learning we learned in this family. That means we should have a plan B. I know a lot of industries which have started making PPE within 1 month of the pandemic. How beautifully they turn the country into PPE manufacturing. Today they are an export of PPE. Therefore, the future of MSME, as well as that, I believe it is very bright. What is that some professionals are more has to come, and all schools, digitization is going to get MSME.
Thank you, Nair, for giving many good news. So many sectors are starting coming, doing well, textile and pharma and many other sectors. So that is a very pleasant news. And then you say that 31st March also up till that time of this restructuring is on. So I think we all chartered accountants should make use of it. And no doubt it is not official enough, but I believe it can be extended also. This is just my pleasure, but let us think that the 31st March is the day. So we should, I suggest our client to do the restructuring. And one thing we should say that here proper planning is required. So that should be done. As the future of MSME is very bright. So that is a very great news. So thank you, Nair, for all your nice comments. Now, Bansal, we have had the FM budget this time. And this we have been, hearing, FM is Nirmala Sitharaman, obviously. So we have been hearing about, wage loan bank. So FM has announced the idea of wage loan bank. So please give your frank and expert comments about this proposition in India, because ARCs are already there. So we need your expert comment about, because this is a unique idea and everybody is thrilled that what will happen like this. So we need your expert comment, sir.
Of course, I can't be expert in FM, so in this guy. See, bad time, it's not a background thing, but it is called bad time, which is a wrong word itself to start with. It's basically to deal with the loans. It's called, the final name is not going to be bad. Really, it is an ARC. Currently, we have 29 ARCs today, and basically that's a reconstruction company. ARCs came into picture in our country under Survey Act. When Survey Act was passed, the ARCs were also allowed by the government. The role of ARC is to take the loans from banks to resolve. So initially the ARC was supposed to be a pure fee-based business model. There was no requirement for any investment by the ARC. The idea was that banks should be free from resolving these loans and they should pass on to the specified business. But maybe because of some issues, some RBI found that it's like misuse by the banks and ARC. So the first requirement came whereby the investment of 5% was stipulated by RBI. Then the second time, again during the Bansal period, he said there should be more skin in the game of the ARC. So he made this 5% as 15%. So 15% when it was made, it didn't remain a pure fee-based business model. To some extent, it became a fee-based plus investment model. 2 years back, RBI came out with a guideline in the ICR norms, the provisioning norms, whereby it said that if banks hold more than 10% security receipt, then it will be treated as if it is not a true sale. So virtually they have implemented it for banks only for this part, not for other activities of the banks. Because they implement for the other activities, the government has to be careful. The government can't do so. They have not fully implemented the index for any other activity. But for this activity, they implemented the index. So basically, what it means is, earlier guideline is that if I sell a loan to ARC, that 50-85 structure, at least 15% ARC use cash to the bank, 85% is security receipt, which is like a junk bond, simple language, which is retained by the bank selling that. So on 85%, the provisioning guidelines were based on investment norms. And that is based on NAV, declared by the rating agency, ARC, based on the rating agency. So once rating agency does the rating of this securities, you give a NAV based on that asset. So based on that provisioning was there. But now this is you have to make hybrid of the two. So they may make investment provision also, or treat this NPA as if you have not sold this NPA. So that means the benefit of this provisioning guidelines didn't remain with the banks when they sell the security issues. So that's why slowly after the last 2 years, on top of it, banks got the equity also from the government. So banks stopped selling under SR structure and they wanted that to sell in cash. The banks would get the cash. But if you want to sell in cash, then you need huge capital, right? Normally banks don't give loan also to us. So it became a double benefit. So there are two deals happening in cash. So that is the stress asset fund came in our country. Big funds like SSG, Oakley, they started buying backgrounds. Coming to your main question, Batman. Why I explained this? Because Batman is an ARC. Yes, sir. Just to understand that concept, I have explained what it is. Now, here also, finally, you will face the same problem. If bank wants to sell in cash, where is the cash? So this ARC is being promoted. Initially, the idea was to be promoted by the government. But now government has raised its hand and government is telling banks only to continue it. So let us say something like 50,000 crore. If I'm considering as an asset of about 2 lakh crore, I pay about 2 lakh crore. And most of these assets which are being transferred initially are fully provided or heavily provided. So if the value is let's say 20%, if they are going to be transferred at net book value. So let's say 40,000 crore you need. So Existing ARCs or stress asset fund in our country don't have that. In any case, the valuation difference was always high. Man. So now when I'm transferring the net book value back to a company which is owned by me only or by the government of India, I don't have to worry about CC, CDI, valuation, and all those, right? So let us say, as an example, we have a claim. So roughly, let us say if the assets are transferred to 50,000 crore, 15% I need cash to buy that. So I need, let's say, 7,000, 8,000 crore, 15%. 7,000, 8,000 crore is being used by the bank. So about 8-9 banks will have equity in this company. This is ARC. And the dividends will be issued as security receipt. One new thing which I am hearing is because as per RBI guidelines, as I explained to you, provisioning doesn't stop. But to stop the provisioning, government is going to give a guarantee for this area. So that your provision stops and indirectly government doesn't have to be equity to the bank. So it's a known cash transaction to avoid contributing equity in some way to the banking industry. That's all. But so the idea is, so then finally there will be a second category which is AMC. That's the management company. So this ARC basically you can say it's more of a book entry, a very small company. That this AMC will be trying to resolve it. This AMC will be private sector. The idea is that when I resolve the case, I should not be questioned. Because if this AMC also remains in public sector, again, bound by the CBI and all those issues. So to avoid those, this is the intention of the government, that this AMC will be in private sector. Then they can take their own independent, they will try to resolve it and provide additional funding also, etc. And then there is this asset again to either to ARC or stress asset fund or to some buyer of these companies or whatever. And to avoid liquidation, because in ITC we are seeing insolvency, any companies are going into insolvency. So to avoid that issue also, this is being proposed. So the idea purpose of this guideline is one, and which is a good thing, the aggregation of all the loans from banks, including private sector bank, it is said. Today, many of the cases we are not able to resolve because banks don't agree. And this year, seen under ICA also, this year, even intertrade agreement was very escalated because the banks could not reach a conclusion or consensus. And in many large cases, there are 15, 20, 25 banks. Okay. So one advantage of this will be the aggregation. What is the advantage of ARC aggregation? The ARC doesn't have a betting bank. Actually, we can't do something different than the bank, right? But it has three advantages. One is aggregation. We can buy from different and decide at one place. Two, it can do a restructuring. This typically banks find it very difficult to do restructuring when a company comes in. Three, it can provide even additional finance. Which again in the banking system, I can't provide additional loan to a company which is already in, because that will also become banking. So these three advantages are the critical of ARC. So we are trying to create a document now which can use the advantages of ARC and in a private sector structure of ARC. I think that is the whole purpose of this guideline. Whether it will succeed, I am hopeful it will succeed. Actually, this will aggregate. And because the resolution will be very professional equal with AMC, it's so but the only thing is the price expectation of the bank finally it will depend what type of asset. If it is a asset like the non-instrument or SRC, I can recover 100%. But if there are assets that are going into a lot of assets that are going into liquidation, and we are not relying even 4% or 5% of any. So finally it depends on the asset. So it's not. Again, you can't expect miracles, this very creative environment. But you can expect good results if AMC works better. It finds a resolution and restructuring for daily additional fund.
Thanks, Bansal, for beautifully explaining proposition. What you said that this can be very helpful as far as debt aggregation is concerned, restructuring is concerned, and financing.
just to add. But I think the benefit which we are expecting is as government that will be free. They will have some more bandwidth to do lending instead of spending time on all these NPAs. So once you transfer these cases, so they are expected to concentrate more on lending rather than on just resolving these NPAs.
Yeah, I know. So I think we hope that this will be very helpful for the country. And if you privatize such institution, I think money is not a problem in India right now. So ultimately it can help. Now my final question to Bheda, because we are already close the time limit. So just in brief, I need your suggestion that now you are a banker, you are in the private bank. So my question to you is, because you are the best person to comment on it, what do you think about the future of private banks? And the second, you are become the director of Yes Bank. Why can't Ashok Jain or other people become director of what type of role chartered accountant will play? So please answer my questions. Thank you.
Ashokji, can you please repeat the question? One is said, you said the future of the private bank. That was your one question.
And then second question is what are the opportunities for chartered accountant? Like you also maybe chartered accountant want to become director of the bank or want to contribute in banking sector. So please enlighten us. Thank you.
So I will take your first question first. That is, your question is how do I see the future of the private banks in India? I think the way we are progressing in the country and the way the private banks are performing, way the government is having the policies about, maybe gradually they are also wanting that the banks which are public sector undertakings, gradually they also are wanting that, the thing should be privatized. So I feel, in my opinion, the private banks have a great future for the country like India, because there are a huge number of private banks which are coming up, maybe small, big, and what we see is, the proper technology is being used by this private banks, and that is giving a lot of value added services to the customers, and the customer bases are increasing. Moreover, if I see the millennials and generation Z, I think that this is the generation which is using technology to a very great extent for a smallest of small things. And what I'm observing, watching, the private banks are really adopting this technology in a very big way, right from the time of your opening of accounts, maybe video opening of accounts or online opening of accounts, to giving loans online, giving loans in minutes and seconds. This is what we see the private banks are working on. And the next generation, that is, I'm talking millennials, who will now take over, and generation Z, they will all be techno savvy group, and this techno savvy group would require the people who will give this technology. So the need of the hour is the technology, and this what we see is the private banks are really going in a big way as far as the technology is concerned. This is our current experience. I don't mean, or I don't say for a while that the PSUs are not doing that. PSUs are also trying to do that very fast. But what happens is, in the PSUs, like we see a lot of mergers, and then this mergers, what happens is the technology which is being used by different banks are different, and therefore even after the merger there is not one streamlined technology, and the different technologies, different platforms are being used by the same bank after the merger, and therefore probably the next generation who will be the customers, they would prefer the private banks. Probably government has also realized that this is the future, and therefore we are seeing that government is also trying to opening up some PSU banks. They would probably try to see that how they are converted into private banks. And maybe you give me example of the Yes Bank. Yes Bank today I am seeing, though it is a private bank, but government is there as a State Bank PSU is holding 30% in Yes Bank. Life insurance companies are holding more than 5%, and thus probably a very good combination of an PSU and a private bank would be really a wonderful package for the users of the banking services. And therefore, I see the way things are happening, way the artificial intelligence is used, way the various technologies are being used, biometrics, face and finger recognition, and moreover also the customer education. I think all this put together, I think private banks in India do have an excellent, great future. As I said, government is also trying to promote this. So this was as far as the private banks future in India, in my opinion, is concerned. As far as as a chartered accountant, what is that is there for the banks? If you tell me, I think, see, there are two types. I could say the opportunities for CAs in the banking sector. One is for the practicing chartered accountants, that is, maybe people like you, me, who have a certificate of practice. That is, we are practicing. As I said earlier also, we can be there as a statutory auditors, we can be there as internal auditors, concurrent auditors, stock auditors, system auditors, functional auditors, KYC audit, forensic auditors. There are a huge number of services which a practicing chartered accountants can give to the banks, and for each and every vertical, I think the chartered accountants are there to provide the services. The count is endless, because the expertise which the chartered accountants are having for this area is absolutely great. And therefore I feel in this practicing chartered accountants, yes, huge scope. Coming to the chartered accountants who do not have the certificate of practice, and that I'm talking about banking as an industry, how the chartered accountants have the scope there. I think we have two very eminent people who are there on the desk with you, who are my co-panelists. They are being absolutely in different areas. Bansal sir is there, who is doing excellent work as a chartered accountant. We do have various scopes as far as the banking industry is concerned, where the person can really have a great future. It could be in transactional banking, like we chartered accountants, we have huge knowledge of FEMA, international taxations, and there are a lot of work which is happening with RBI. And the RBI is is wanting that the banks directly come for this sort of transactions. And in banks, naturally, this sort of subject knowledge, subject matter experts, I think chartered accountants are hugely favorable for that. Treasury management, again, the educational and the practical background which the chartered accountants have, I think managing treasury, again, chartered accountants are really very good at all this. Portfolio management, you talk about any vertical in the banks, and I think chartered accountants are there in all the banks, especially I'm talking about private banks, and they are all at a very, very good position, very, very influential position, where in different verticals they are performing, including the functions like HR. Here also I see the chartered accountants being at the top. May it be chief risk officer, maybe chief compliance officer, vigilance officer, naturally finance. So always I think it is with the chartered accountants. So chief financial officers, chief internal audit. So I can really see any vertical you pick up and you will find chartered accountants. So because this is the area of finance, where there is finance, chartered accountants are normally accepted, and also very closely connected to this finance is the risk. Again, the risk management, the chartered accountants can really do huge work in this, and therefore I feel chartered accountant, whether in practice or in industry, huge scope for in this banking industries, and maybe upcoming chartered accountants can really take a lot of things from what we have discussed today, and they can really go up the ladder very fast if they are committed, if they have real flair for this particular industry. Scope is absolutely unlimited. Sky is the limit. I think this is with this I would end there. If there are further question on this, I can end.
Thank you, Atul, for your words of wisdom. You explained that enormous opportunities are there for chartered accountant because we are hardworking and we can do, especially in finance, we are expert. So with this, I think friends, we were having great session for this panel discussion, and I can say that installments like all three, we can take hours and hours. I can keep on asking, but ultimately we have to keep the limit of the time. So with this, I thank the WIRC for organizing this, and I request our Secretary Mutsuja Kacholaji to propose where is the vote of thanks. Thank you.
Thank you, Ashok. Friends, I would request all of you to carry out a loud round of applause. A big thank you. Atul, thank you very much for joining us, spending your valuable time and talking us through the whole value chain of the corporate governance and the various opportunities provided from fraud to audit to so many things that you touched upon in the last 1.5 hours. Bansal ji, so well and so depth of knowledge of the whole ARC subject. We are really grateful and thank you, sir, for joining us today. And Suresh ji for joining us and telling us about all whatever is happening in the SME world. And Ashok, as usual, like putting the questions and extracting all the information that was possible from all the three panelists. Thank you very much. Thanks a lot. I would like to thank all the participants who joined us virtually today. All the participants who are physically here, I would request you 1 more minute so that all can come on the dial. We can do a photo, a group photo, and then we can all leave for the day. And before that, Vishal ji, if you can like stop the session. Vishal ji, recording on here. And Vishal can bring this session to a close. So, I want to thank all the WFC staff for everything that they did to make this happen successfully, virtual and physical. The banking committee chairman, Hitesh Mohan, and also the WFC chairman. Thank you. Thanks a lot. I request all the